Hello traders and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 24th. Michael Boutros here with you this morning. DJ, Eman, Mark, Peter, Pete, Pooja, Tom is in the house today. Great to see you guys. So where do we start? The docket is still kind of quiet today. We head into the Aussie CPI data later tonight. Aussie obviously coming into that near-term support target. You might see I was looking at it right before the webinar here. So we will go over that tomorrow morning. I didn't actually recognize that it's going to be the Bank of Canada interest rate decision. Now, we're not necessarily expecting anything. They're not actually expected. Well, I don't think they're going to raise rates at all again this year. But in general, could offer some volatility. So we'll take a look at the CAD. Where it's trading right now, we're already above support resistance. We've tested it as support. So I really, from a trading standpoint, I don't know if there's much opportunity for us to take anything on the short term there, but certainly we'll take a look at that. From last night's update, obviously DXY real quick, we'll take a look at the pound crosses. Looks very interesting. So pound yen is something that we talked about in the webinar yesterday. We'll take another look at that today. Also pound Aussie. And I just wanted to highlight some interesting setups. First, the crude setup that we've been following, and then in dollar MEX actually coming into a big spot that we turned from. From the previous updates, all those other ones are still in play for the dollar. So dollar Swiss we'll touch on. Obviously the Aussie dollar heading into the CPI print later tonight. And also, I'll give you a quick look at the one I'm looking at with the euro. I'm kind of holding off on trying to put out a setup on that, guys, just because obviously the major event risk that we get into on Thursday with the rate decision likely to be a big market mover. So kind of been a little timid on that, but I'll take a look at where the euro is currently standing. Hey, D, good morning to you. Great to see you. Okay. Dollar yen. Eman says, hello, Mike. Please add dollar yen to the list. You got it. Dollar yen. Okay, so Jamie likes the short side for now. We issued out a trade last night, guys. Entry at 113.60, stop at 114.15. So we'll take a look at dollar yen. And that's what's on the list for me. If there's anything that you didn't hear mentioned or a trade that you do want to review, please feel free to throw them on the message board at any point. So dollar index. I've been working with this sort of trifecta here because I really wanted to stress, this weekly chart. You guys have all seen this before. Again, it just speaks volumes to where we are right now. And I still am focused on this key threshold. Now, the weekly range has been rather tight. We really haven't done much besides push into this resistance level, but this is still the focus for me. So that's why for dollar CAD, I don't know if I want to chase that right now. For the euro, again, it's a little bit wishy-washy. I do like the fact that on a dollar strength play, the Aussie has been actually performing rather well. But again, 60% weighted the euro. So just something to keep in reference. And again, to this week's close is going to be absolutely paramount. Okay, so keep your focus on that wider resistance range. Again, as we drill down, the deeper you get, the more that region continues to be highlighted. You have the 100-day moving average, you have the former August highs, you have the basic 236 retracement. Where we turned from yesterday was a perfect sort of confluence region. We didn't quite stretch into 94.03. But what was the high there? 94.02, grant me a pip or so. And then we pulled back. Here's the weekly opening range. And this is what I wanted to highlight yesterday. As far as, where this thing is. We came into initial resistance. Yesterday I was noting support along the parallel, but really you want to stay constructive above 93.69. That's the level that needs to give out for us to get the validation for some sort of effective turn. And, aside from it being a basic 618 retracement, it's the objective weekly opening range. Here's your weekly open. We made a bottom right there and rebounded. So objectively, a break of that downside move would sort of shift the near-term focus lower for the DXY. That being said, I wouldn't put it past this thing to still probe up into 94, into 94.20. These are longer term extensions. This is the 618 extension off the low. This is a near term 100% extension just off the monthly advance. And then obviously you have those former swing highs from August of last year. You have the 50 line for the current operative slope. This is a newly added slope that we added. Remember the update that was provided for you last week was just this down slope. But once we broke this on Friday, this slope has been offering some decent pivots. So focus levels remain unchanged. And the real play for the dollar index, remember, the main event risk is heading into the end of the week when we get the US GDP, third quarter GDP release, and specifically that core PCE ratio, the Fed's preferred gauge of inflation. So with that in mind, the focus is on 93.70 into that 94. I would stretch it into 94.20 even. The long side is at risk while below this. At the same time, this is the level we need to get to really validate the break. So from a trading standpoint, getting involved in this, I really wouldn't be targeting anything outside the weekly range so far. I wouldn't put it past this thing for another stretch into the highs before we turn over. But just know that we're heading into that major resistance, both on an intraday, daily, and weekly charts. Okay, so just a quick objective look at the base dollar index. Any questions on this before we move off? Levels and outlook remain unchanged from yesterday. All right, that's number one. Number two, from last night's update, is pound yen. You guys get me interested in these trades. Your questions prompt it. So whenever you guys do want to look at something that we haven't been necessarily focused on, feel free to bring it up. Just looking at this in the webinar yesterday, we were kind of eyeing this thing pulling off of a major support barrier. If you guys recall, we were actually playing this earlier in the in the year once we broke out of this long-term 2015 trendline resistance. It was a confluence resistance level of the 50 line. You had the 100-day moving average. You had again that long-term trendline resistance. All gave out to the upside. And again, not really a big fan of where it kind of petered out. But if you take a parallel of these lows and extend it off of the yearly open or the yearly opening range high that we made that first week in January, it actually was a perfect tag of resistance. So on the pullback, objectively, I did want to see price hold 147.86. And if you guys remember, that was sort of our last target on the way down. We did scoop a little bit below, but I do like the reaction that we got here at confluence support where the 50 line converged on that. So what happened? Well, the rebound went right into the monthly open, and that was resistance yesterday. Here's what it looked like on the intraday charts. You had that 618 retracement. You have the monthly opening range highs, okay? And the open all up here in this little nestled region between 150.60 and 150.96. Larger ATR trade. So always remember when you're getting involved in this pair, you need to stretch out those profit targets a little bit because there's a lot of range to play with on a daily basis. That said, sort of the focus for last night was on a pullback, a near-term outlook of just the extension off of the advance puts 100% extension exactly at the highs that we made at the start of the week. So inherently, you're looking for a little bit of a pullback here in the pound yen. Inevitably, you do want to be on the long side. Here's what it looks like now. You got a little bit of a spill lower. I would have loved an entry somewhere near 149.20 initial support, irrespective of the fib, just a clear-cut pivot in price. Support, break, saw acceleration, resistance. Even when we popped through, it was instant support for a good 3 or 4 hours, and then we turned back lower. The break saw acceleration. Kind of wanted to see a pivot off that. Bullish invalidation down at 148.42. As long as we stay above that slope, again, that 50 line, you kind of want to remain constructive. Also, that actually represents, by the way, the swing lows that you made here, the swing high rather that you made here back in, what is that, December of 2016. So don't have anything on this yet. If we do get a spill lower, again, I'm looking for entry at one of these. A breach above this, again, 150.96 is just a soft target. Note that the monthly opening range didn't really come at the monthly opening range high didn't really come at a sort of significant high, right? It was along the decline. So I don't really tend to stress the monthly opening ranges on that front. But that being said, I do want to be mindful of it. So if we do break above 150.60, look for a reaction at 151, 150.96. I wouldn't expect that we would see too much there, but if we do crack through, I think you have free reign up until 152. And that's just a conservative near-term target. 1618 extension off that low, and the 38.2 retracement. This is of the broader decline off the highs. That's this retracement right here that you're looking at. Okay, so that actually comes in also with a decent pivot here off the 2016 April low. So the levels very, very clean. If you guys remember yesterday's webinar, if you joined us on Daily FX, and one of the things I was saying is it's in one of those environments where the levels are super clean, but the immediate momentum is sort of really lacking. And that's kind of where we're falling a little short. You're getting these things kind of hovering, and then just that decay in time just makes it sort of lose some steam. But that said, focus remains unchanged. Okay, wait for a possible pullback here, 49.20, 48.40 ideally for possible long exposure. But it's really that 150.60 barrier that you really need to get to, or really need to get through, I should say, to get this thing going. Remember, these are always, and I will stress this every time I see it, guys, these are always my favorite reaction pivot levels, a 618 off the high and a 100 off the low, or vice versa. Tend to be very, very significant in price, and we see that time and time again. Okay. Questions on pound yen. I'm going to jump right out of the order here, and I'm going to take your question, Eman, on dollar yen, since we're talking about the yen in general. I do like pound Aussie too. That's a really nice trade, but here's what dollar yen looks like real quick. I know I haven't really given an update on this recently, but I don't really like what price action is doing. I'm bringing this up because I know a lot of people are looking at this. The near-term chart looks okay. The daily chart is kind of really tricky here. So let me just kind of break this down for you. First of all, let me take it out even to the month, to the weekly, just show you where we are in broader trend. If this trend line, objective trend line resistance off the high, is legit, and the only reason I leave it on, you saw a kind of wicked price action here, but on a closed basis, guys, it was actually a really clean break. Look at that. Test as resistance, pullback before we break. So I'm not really willing to discount that just yet, but just something to keep in mind. Now, that being said, you've been in a really well-defined range for the majority of the year since March, okay? Between the 50% retracement off that low from last year and the 618 retracement of this year's range. So you can see that we've been straddling that. We popped back above the 200-day moving average, the 52-week moving average, pressed it again as support, and pushed higher. In my mind, it does shift the focus a little bit more to the upside. Now, the advance, though, does look like it begs some sort of near-term correction here before we break. The daily chart looks like this. Not really the most encouraging. We had a confluence resistance there of basic trendline resistance off the highs just from March. You had the monthly opening range high and the median line. So we broke through all of that, pulled right back, closed there as support, and we're popping higher. It's an inside candle today, though, so it still could mark exhaustion. Okay, and then the entry that Jamie has at 1360, I don't think that's so far off. I mean, we're already in that basically, but keep in mind we're inside the candle. So as long as I want to see that high hold, let's just say that. I want to see that high hold that we made yesterday for conviction on trying to play this to the short side. If you guys remember Sunday's update, I actually just showed you the daily chart on this. Here it is. And I just wanted to highlight the fact that this thing, where was it? Oh, no. Had gapped higher. On the gap higher, sure, you look for a possible pullback to fill that gap. It's kind of the natural instinct that people play. I didn't really want to play that downside. More so, I was looking to see if that holds a support, and it kind of did. Wouldn't want to say it's the cleanest hold, but certainly on the weekly opening range, we closed right at the weekly opening range high, or the monthly, opening range highs, then we bounced. So it puts the emphasis on yesterday's candle. That's all I'm saying. I would play yesterday's candle in and of itself as the opening range for the week. So if we break below yesterday's low, look lower. If we break above yesterday's high, you're looking for basically that 114.36, 114.30 level, just some nice confluence highs with that 618. But I mean, you're off to the races if that gives out. So, man, does that help? I know I don't really have a very strong opinion on this personally. I know that Jamie still likes to short, but if we were to break above the weekly opening range highs, the median line, it would reinforce, the gap higher. We filled the gap. You look to move on to the next high. So not a really big fan of dollar yen here, to be quite honest with you guys. I guess you shouldn't be surprised to hear that from me, but does that make sense, man? On a real near-term approach, that's how I would play it. Definitely helps. Thanks. Holding it short. Yeah. See, I mean, again, this is sort of a really sweet spot. I would love if it does hold here. I'm all for it. I'm all for it. You fill the gap, you bounce a little bit. If you fail at the highs, that's like a classic exhaustion play back down. But if we do make it back above this region, I wouldn't be too surprised if we see 1460 on a quick tag there. Okay, and that is dollar yen number 3. Okay, back to yesterday's update. Here's number 4. It is pound Aussie. So, where art thou, pound Aussie? There we go. Okay. The play was long last night, and I didn't want to kind of just jump into it, but this was a perfect confluence region of resistance that we had, or support rather, that we had highlighted in the piece. And that is right here. Whoops. Okay, so I guess let me start with the daily chart first. Basic premise of the trade. Remember, this is one that we've been following for a while. The slope off the 2015 trend lines, those parallels have been offering some clean breaks. We got that break early September. Big resistance at 171.19. Okay, the yearly open, you had a 618 retracement, the works. We spent a good 2.5 weeks there before breaking lower. We wanted to stay constructive above 67.91. I think I might have noted this earlier. We had the 38.2 retracement. We had the median line. A quick spill below that for a day did rebound right ahead of the confluence of both the 100 and 200-day moving averages. The subsequent outside day reversal off of support, always going to be a bullish thing. So for me, that did shift the focus higher. How did we play it though? Well, the question was, if this near-term slope is in play that I just kind of eyed out yesterday, looks like the lower parallel caught that low perfectly. So on a break above this near-term median line, well, you also had former trend line resistance. You were basically at support. It's a very gutsy call to try to play that, but the opening range low for the week was just below that. So you're looking for a topside pop, initial target 169.68. The upside failed in overnight or in Europe this morning at 169.65. So just ahead of that. And then again, we posted another outside 2-hour reversal candle. Near term, again, you look for that same slope as support. Okay, but the game plan remains unchanged. I mean, I would actually even bring up possibly the bullish invalidation level at this point, sort of to the weekly opening range lows. Okay, kind of gives you the support somewhere around here. But broadly speaking, it's still a pretty clean trade. Something you definitely want to keep an eye on tonight as we go into the CPI numbers for Australia. Okay, if the Aussie weakens further, it only fuels the upside here. If you're not in any positioning already, first of all, if you were in any long positions from last night, you should definitely still have your stop at break even. The run up here failed 3 pips ahead of target, but that's a classic sort of exhaustion play. So look for near-term support here. If we do break below this, again, the weekly opening range low, longer-term slope support, median line right here, should offer some leeway here for a bounce higher. Okay, topside resistance, if we do break this, I did note just the swing highs that we made here around the 170 handle, but you're really looking for 170.80, 171.19, that yearly open 618 confluence that caught the highs earlier. Look also, aside from those two levels being the significance that they are of the 2017 Open and the 618, I also just wanted to highlight that over the next few days, look how much lines up there. The near-term descending slope off the high, upper median line parallel, and the embedded slope here off the low, upper median line parallel. Add to that longer term 2015 slope that we've been following. So again, levels super clean. Pick your entries wisely. Okay, pick your entries wisely. I'm even going to scratch this. Don't want you even looking down there right now. Any questions on pound yen? Or excuse me, pound Oz? Might be a decent one to look at tonight, especially if you want to kind of keep your hands off the dollar. This would be a nice one. I mean, obviously, it's going to be depending on the data, but look for volatility here. Inevitably, I am looking for that pop back higher near 71.19, 70.82. I know this is a messy chart, actually. So, guys, I hope, I try to give you the different time frames so you can get a better perspective. But for right now, the only median line formations you should focus on are this broader one and the embedded one. That's it. Try not to get too confused there. Any questions on pound Oz? I see a couple new names here today, guys. Just a quick reminder, if you're into the room and you're looking at any charts that you want to save for future reference, there's a camera button in the top of the GoToWebinar screen. Feel free to click on that if you want to reference these charts later in the day. But no changes to any of the levels that we highlighted yesterday. All right, that is pound Oz number 4. Number 5 from last night. I did want to take a quick look at what crude was doing as we were coming in some interesting levels. We highlighted this setup last week, if you guys remember. And basically, we wanted to stay constructive last week well above 51.19. That's basically the level that we wanted to see hold as support to get this thing going higher. Well, that's basically where we bottomed out. We got a little bit deeper of a cut. But it was very short-lived. Where's crude? Here's crude. And that was here on Friday, right? Or late last week, right on Friday. We dribbled a little bit below up 51.19, but again, that slope held again, rebound higher. Levels remain unchanged. And as I said yesterday, the focus is on a break of the 51.19, 52.45 region. This is kind of the zone that you need to see clear. Now, I would start to strap up that support level with this slope. As far as the downside is concerned, but largely speaking, that's sort of the idea right now. Look for a break of this near-term range for guidance. I favor a topside break. Just on how this thing's been coiling up, you can see that the pullbacks we've been finding have been higher and higher in momentum. So the emphasis on this, in my humble opinion, is look for the 60 pop, look for the break above 52.45. You're off to the races. 52.79 is just a soft target. That's the April high day close, which also caught the highs that we made earlier, or late last month, I should say. But the real big whopper is up here. Okay, 2017 open and the 100% extension of the entire advance off the lows. Boom, boom, boom. 2017 open converges right there. So very interesting setup in crude. And again, we were talking yesterday about sentiment in the webinar and kind of just shooting around some ideas. And I think Jamie highlighted it right here in SB, guys, that article or that headline showing the death of the gas engine, right? Crude's been ripping higher ever since. So, if we go sub 51.19, yes, I would expect a larger correction. But as it stands right now, I still like the upside. Also note that yesterday, interestingly enough, or an overnight trade actually, that low that we just made was exactly off the monthly open. So not bad. Emphasis on a break above that 52.39, 52.45 region. Any questions on crude? Okay, that is number 5. Number 6, And this is just a quick review. I don't know how many of you are actually really interested or have been trading this or have traded this in the past, but a decent pair. Once it breaks and makes a directional break, I know Jamie follows this much more closer than I am, but I was just taking a glance through some charts I haven't seen in a while and wanted to highlight 1920, 1920, to be precise. Big level, okay, near term. Here's what the daily chart looks like on this right now. I don't have a compelling intraday setup for it, but with what we're expecting with the dollar, this could be a very interesting play. If you know that weakness starts to manifest itself here too. Look at this on on the daily chart. So the level I wanted to highlight, and we actually did almost get a tag in overnight trade, the high 119.10, so not quite, but close enough, is that 38.2 retracement. This is of the entire 2017 range, and then the median line. And this is a perfect example, guys, of why we don't want to necessarily abandon parallels once they've been broken. This is just a simple pitchfork off the high. I follow this more for some of my colleagues in the industry who do follow this trade, so I kind of send them analysis on this every few weeks or so, but nothing I follow on a day-to-day basis. The only thing that I kind of noted was that even though we broke the lower parallel, on the recovery, look where we found resistance right there. Look where we found resistance right there. Third tag, kept it to the downside. Once we made those two lows, I took just a parallel of that same slope in red here. You can see a touch, obviously a little bit of a break and messy play here, but largely speaking, that slope manifested itself mad times. 1, 2, break, resistance, support, support. So we've been working with this slope ever since. Look where he found resistance on the break back above the 18 figure, which was a big zone. Okay, big pivot in price, huge level of technical, of just a pivot where price has seen multiple inflection points. So the break above shifted the focus higher. We came right back into that parallel where we held for 5 consecutive days. Look what happened on the break. Acceleration. So further adds, emphasis. The market is still paying attention to this slope, and that median line, okay, for the actual origin of the slope, converges on the 38.2 here. Okay, some other interesting levels around that region is the high close. So subsequent to the break we made here, the high close that we made back in May was also right there. Long story short, you're seeing divergence in momentum. Prices coming into resistance would be a decent area to start looking for some exhaustion. And again, that kind of meshes well with what we're looking at just on the DXY in general, holding resistance right now. So it's something that might offer a bit of a tell, if you will, on what's going on with the greenback, something to keep an eye on. Again, personally, not a trade I get involved in too often, but when the clarity's there, the clarity's there. Any questions on peso? Okay, let's jump back into the juicy dollar crosses. Again, the update from the previous session on the 22nd highlighted the Aussie and the dollar crosses that we've been following since last week. I'll go over dollar Swiss in a minute, but here's Aussie. So Aussie was number 7. Okay. So Aussie dollar looks like this. The major thing here was initial support 77.95, just a little bit lower. You had that sweet spot, that confluence resistance, confluence support, and the median line for the downside. So you had that there, upside there. 618 retracement was just ahead of it, 77.95. Intraday charts also, we opened the week basically at support. So I was looking for a rebound here to get long. You didn't get much of a rebound. To get short. You didn't get much of a rebound. It kind of just broke through. So if you didn't get a chance to get into this one, I kind of, I don't blame you. It was a tough call. Here's what the intraday chart looks like now. Well, here's the daily. Just wanted to highlight we're coming into that zone of support basically right around these levels. Okay. The intraday chart looks like this. This is the 240. Obviously, that's the descending slope pattern we've been following off since the highs. Again, there's the median line. The reason I was looking for interest here is because this was 100% extension off the decline. So if this was just going to be a correctionary play, that's where you would have expected support. Obviously, our bias is to the downside, so we're more looking for an actual sort of impulse move, and the downside break further validates that, in my humble opinion. The entry was basically an overnight trade. If you got it, if you're trading Asia or European hours last night, you had the ideal entry. Even if you caught it late, stop against 78.35, as long as you have that there, really was looking for the downside break. So 77.76 is basically right here. Again, that's the November high. Not really looking for it to be a major player, but again, on the daily chart, that confluence support region does warrant some respect. Okay. What do I want to say here? One other thing. This is what I wanted to highlight. Yeah. So the monthly opening range here. Here's our monthly open. You made a run at the low. This did seem like a monthly opening range break, but the quick recovery and the secondary retest really puts the emphasis on here. So I know we're checking near-term support, and while we could see a rebound, you see on the intraday charts, I highlighted this region, 2016 high day close. Okay, you also have the swing highs from back in April, or excuse me, that's March of this year. Nice little pivot zone there, 77.35, 77.50, 15 pip zone, and also covers the monthly opening range low. Okay, such a scenario, you're basically looking for a drop into here. 200-day moving average, slope support, former slope resistance, and interestingly enough, on the weekly charts for Aussie, all of this looks 100% clear. Look at that. So that's why I'm inclined to think you get a deeper cut in Aussie, all because of this chart, to be honest with you. So I was just adding some fibs on here yesterday, and actually the 618, just of the near-term advance, is right there. The 38.2 of the entire advance off last year's low is right there. The 52-week moving average, oh man, that's right there too. Add to that former consolidation resistance, current slope support just off the lows, and again, a parallel of this advance, you saw support, a break saw acceleration on both sides. Again here, resistance before break saw acceleration. All of that gives us a zone basically of 76.30 into, basically 76.50 in the same region. All down here. So let's see if we can't get this picking up. Aussie CPI data is tonight. Again, be mindful of that, but could be the catalyst that we need to get that move. Initial resistance, do look for today's high to offer some initial resistance. It is the 100-day moving average, and we did respond right off it. But essentially, you would need a break above the opening range high for the week, which is the exact 618 extension. And that's basically 78.35, 78.34. Questions on Aussie dollar heading into tonight's release? Okay, so for consumer price index, by the way, for Aussie, just background information, third quarter, we are expecting it to come in at 0.8% from 0.2%. Also, even the index on the annualized basis for the third quarter is supposed to come in, which is the headline read, the year on year, that's supposed to come in exactly at 2%. So if it comes in stronger than 2%, I think the risk is for a little bit of a recovery in the Aussie. How many times price should do a test for a certain level to have conviction that it is either holding its trend or breaking it out in Aussie dollar? Great question, Eman. I'm trying to figure out what you're talking about here with regards to the Aussie setup. So let me read how many times price should do test for a certain level to have conviction that it is either holding its trend or breaking out. So here's what I can tell you. And this is actually something we went over with a couple webinars ago when we were talking about that. There's a difference between time spent, Eman, at a trend line and times tagged. The more times, the more number of times it's tagged, typically the more conviction you have on that level of being a major pivot in price or being a major inflection level. Remember, when we're talking about trend lines in general, Eman, 2 points is speculative, 3 points confirms. So anytime you get more than 3 tags of a support line or a trend line, it becomes much more significant. Time spent is a whole different ballgame. The longer of time that you spend at a trend line, in my experience, I've seen that that's more often than not you will see the break. Right? If the price spends a lot of time at a trend line, it kind of just sits on that. Typically, that does give way. Does that make sense, man? Between the two, you're never going to know if it's going to break or not ahead of time. You just have a broader bias, and if my broader bias is weighted to the downside, then I'm looking for rallies to sell. And then when we get into that level, what I always do, what I always tell you guys to do, scale out. So let's say, for example, you took a short off of this rally here. Okay. 78.20. You didn't get near the high. You got 78.20. Once it got into the 77 handle, once it got into the 78 handle, 77.95, this zone, I take a little off. I don't know if that's going to hold or not, man, right? It could blast right through like it did, or it could rip right higher. So from an intraday standpoint, if you're trading real near term, you use opportunities like that for real short-term exposure. So if you took the short from, like I said, 78.20 against that high, once we got into this zone, we take a little off the table, we bring our stops down to break even. Now, if we get the break, great. The next level down was 77.80, right? So you take a little bit more off that trade. Bring your stop down to the previous exit, right? And that's how I play the breaks. I never know if it's going to break. But if my broader trend is to the downside and I got a decent entry on the trade, typically I'll take some off and I'll put my stop at break even. Man, that way if it does break, good for me. I'm well positioned. If it doesn't, I'm not going to take a loss. I'm not willing to take a loss. Capital preservation is always paramount. So if I'm in the trade and it goes in my direction, I'm not willing to take a loss on that trade. If I had taken a short here and it never hit initial target and it went right into my stop, I wouldn't even be upset. Okay, that happens. But when it does come into my initial support target, if I don't do something and it comes back, that's when I get mad at myself, right? Because my initial inclination to get into the trade was correct. It moved into my target. I didn't know if it was going to break, but I wanted to push the break. So typically I'll always do something as we get into the initial target. Make sense, man? Does that help? To max. I hope that means maximum. I don't know. Just thank you. You're more than welcome. More than welcome. Okay. So that is a quick look. I hope, and guys, if you have questions like that, by the way, at any point, feel free to throw them out. I mean, this session is always for your benefit. So I'm much more flexible with what I can say here, in that I can say whatever I want here. So feel free. Dollar Swiss looks like this. Also a very interesting trade. Remember last week we got a little bit stung trying to call the high on this. Well, we did get an initial play back to the downside that did offer some really nice pullbacks. Obviously things just reversed face on Friday and made a huge breakout of a big level, and that was 98.13. 98.13 was defined by a whole bunch of different things. It was the swing low that we made here. B, it was trendline resistance off the yearly high, of which, we're asking about the trendline breaks, of which 1, 2, 3. We've already had 3 tests. So now I know that this trend line is in fact in play, and it gives me more conviction on using it as such. Now, we came back for the other test again last week, and this is where we got bearish. Again, when we pulled back, support held perfectly at that median line, and then we ripped face on Friday. So yeah, I took a stop on the rest of that trade once this ripped. We open this week yet again at a near-term resistance. So I don't know what the hell to do on this, guys. I'm going to be completely honest with you. I'm not going to advocate you try to fight this rally, but at the same time, I'm not interested in getting long. We're still coming into a major region, which is highlighted on the weekly charts. And again, it's such an important region, or such a perfect example of why we need to keep the broader picture always in mind. So 98.82 is the 50% retracement of the entire decline off the December high of last year. The 52-week moving average is just below it. And then we had this upper median line parallel right there. Now, I don't know if this is in play, right? We haven't gotten too many plays off this slope, but further highlighted this near-term resistance zone we're testing right now. If we break here, guys, I do want to note one simple thing: an objective technical analysis 101 double bottom play. The measured move takes you all the way up into 101, the 101 handle, 101.08. Now, that typically would be validated with a break of the high right here. So typically, like basically since the 16th, we should have been looking for that target. But in light of all the technical things that we highlighted here, I reserve this region as sort of the breakout validation. So just to keep things in perspective, you got a couple hundred pips to the upside. If this breaks, this is also the objective yearly opening range. You set a low in January. You try to probe that low in March. In the beginning of the third quarter, this thing finally gives out, or in late second quarter, it gives out and kind of breaks to the downside. So here we are testing the underside of that again as resistance. So that's my play. That's my problem with Swissy. That's all I'm looking for. If we were to see an assertive push and a close above 98.80, end of conversation. You're still in this uptrend. You got to look higher. Such a scenario, you're looking at 99 as initial target. It's a 618 retracement of the yearly range. At this same point, near-term support is still right back here, and this is still the level you need to break. 200-day moving average, former swing lows, and former trendline resistance. Questions on Swissy? Thanks. It's very good technique to watch support and resistance and then put the trade at break even. So Rizwan, that's just a big part of my trading. He says, first time I got understand we should put our trade at break even. The first time I got it and understand why we should put our trade. So yeah, Rizwan, the only caveat with that, and I wouldn't, I'd be remiss if I didn't express this to you, is this. You can only, how do I put this in words that make sense? The one drawback I've seen from guys getting too aggressive on the break even is you need to leave yourself some room for the market to kind of gyrate. And what happens is if you tend to take off the first quarter of the trade on the first target and go break even at the rest and you get a couple of consecutive trades, one full allotted stop can undo those last three trades. So I just want to kind of put that in perspective. I'm a big fan of scaling out. I'm a big fan of the break-even stop. Again, no one went broke going break-even, but at the same time, you want to make sure that on whole, your strategy is respecting that. And specifically, when you do get into initial positions, you want to make sure that stop kind of doesn't undermine your last couple of good trades. All right, Rizwan, so I hope that helps. Good to see you in the room. Good question. All right, any questions on Swissy or Aussie for that matter? So I'm still of the mindset you get some sort of exhaustion here on a pullback. Again, I can't advocate we try to fight this at this point. So just want to see what kind of reaction we get there today. Maybe you get a spike into 99 and turn around. I don't know. But I'm just not interested in trying to chase the long. All right. Gold. Here's what gold looks like. And the euro yen actually was an interesting trade too. So gold has been something that obviously I've just been following very closely based on everything that's been going on. We saw the break last week. of this region, or earlier this week rather, of this region, which was kind of a big zone. Let me show you what we had here on the update from Sunday as we were opening. We opened there and dribbled quickly lower. I thought you would get a deeper drawback from there. You didn't. It kind of fizzled out. It did break lower, but you kind of plateaued right around that 1272, 1273 area. And then here was a huge rip that basically didn't quite check out channel resistance. And here we are just kind of straddling this key zone that we've been looking at. So all I want to say is for gold, you've made a round trip and you're almost unchanged on the week, right? So you made a low, you stretch into a high, you've come unchanged on the week. That puts a very clear focus and emphasis on the weekly opening range. The broader picture for me for gold, longer term, is definitely constructive. Again, my humble opinion, but near term, the fact that we kind of rally towards the weekly high, towards the underside of that trend line and held as resistance leaves me a little uncertain here. So, low conviction on this trade. You're looking for a break of the weekly opening range. If you do break lower, I'd be looking for longs down to that 618. A breach above 1285, which is what we talked about at the start of the week. Actually, it shifted just a bit. It's supposed to be that low, 1284. A breach above that would have me looking for a pullback to buy while above that region. So if we objectively break the weekly high, we look for a pullback again as low as you can get. See if you can't get that stretch near 1295. Would certainly help if the dollar turns over, right? All predicated. Okay, that is gold. Quick look at euro, and then we will, and then that's all I have. So if you guys have any questions beyond that, feel free to throw them on the message board. But here's what euro looks like. I'm going to give you an update of this again, as close as I can to ECB, because I think ahead of that, you're just going to see a whole lot of chop and nonsense. The major focus areas for you to focus on moving forward, at least over the next 48 hours. Again, I'll give you an update on this on Wednesday night, but 1707, that would consist of two equal legs off that high there, 100% extension. Really, I highlighted last night 1679, which is the 236, and last night it converged right on that. But we didn't quite get that drawdown in there. So now that time decay has taken the slope a little bit higher, I just want you to focus on that lower parallel. Again, the daily chart really further highlights that region. You have the 100-day moving average, 236 retracement, parallel support, all right there. Objectively, my friends, it is also the monthly opening range lows. So super clarity on the levels, near term. You gotta wait it out. If you're holding shorts, stop against the weekly open. The monthly open kind of seems like a common sense near-term resistance level. So stop near 117.85. If you're holding anything short from above that threshold, I think that's a decent region of resistance. You're looking for that stretch down near 116.80. Again, based on that time, maybe choke that up a little bit. 116.85, 116.87. Questions, comments, concerns on euro. We'll revisit this, no worries, ahead of ECB for sure. Again, one other trade that we highlighted this week was euro yen. And euro yen still has a major resistance threshold. I didn't even put an intraday chart because I don't have anything necessarily compelling here. But the daily chart speaks volumes to where we are. The upper median line parallel of this formation, which has offered some decent pivots in price, and a basic objective 618 retracement of the entire decline off the 2014 highs. Add to that, it is objectively the yearly high close, the yearly high day close, and the yearly highs just above 3440, excuse me. That's a mouthful. So any way you look at it, euro yen is coming to a huge region of resistance, and the implications on a breach here would really leave lots of room to the upside. You're looking at 136.20 as an initial target, and really 140.21 would be just sort of near-term targets I'd be looking at on this. But as it stands right now, the focus is on a reaction off that 134.29 level, 134.28 level. Make sense on this, guys? The thing I noted on this on the Sunday update was as we were heading into this region, where it was right here. What I wanted to note on this is the fact that on the daily basis, the following day, this is the Sunday update we were talking about that. Yesterday, we made an outside day reversal off that. So again, does tend to shift the initial focus back to the downside. You're seeing a rebound here. Same focus, same trade setup, same plan. Sub 134.30, you want to be cautious of long exposure. And eventually you want to buy this pullback. But I'm just talking about the intraday, the near term. This is the risk. All right. Any questions on Euro Yen? Went over Aussie CPIs tonight, BOCs tomorrow. That was Euro number 9. Euro Yen was number 10. Please take a look at the U.S. 10-year yield. I haven't looked at 10-year yields from analysis. I mean, I look at the terminal, but I don't have it. What's the ticker for that, Mark? You know off the top of your head? Okay, bear with me 1 second. This is the first time I'm actually putting a chart together. Again, the charts I have on Bloomberg are not. We are prohibited from publishing those, so I can't remember what I was looking at. Bear with me 1 sec. Yeah, so you're seeing an outside day reversal today at the highs through resistance. Today's close is paramount, Mark. Today's close is paramount. Usually when you see those outside day reversals to the upside at resistance, a lot of times those are exhaustion, except when the outside day reversal actually closes and clears that level to the upside on a close basis. Those, again, just my experience over the years, I've seen have been a much more constructive trade setup. So I'd be looking to see how today settles. If we close northbound of 204, 240 rather, I'd be much more inclined to look higher. This is also the objective monthly opening range high, so a close above that level again would suggest looking for a late month high in yields. Yeah, absolutely. Hey, Mark, does that help? Is there something specific you were looking at with this? You're talking the break suggests USD strength. It does suggest USD strength just on the basic, on the whole, Mark, but there's, I mean, you could, let me take it back. You could be looking at the divergence play, right? Typically the divergence play is one breaks at high and the other one doesn't, and then typically that's actually a very strong signal of a turn. So one could be lying, and that's why I tell you for the 10-year, you basically want to see what happens at these highs, specifically as the dollar index tests these same highs in its trend. So let's say let's say there is the daily chart. Let's say that the yield on the 10-year kind of holds 240 or closes above 240. Price action, the dollar index is able to hold below 94.15, right? That wouldn't be necessarily for me a call for me just to run into dollar strength. If we move northbound of 94.20, 94.15 in index, and we see a close northbound of 240 on the yield, in my mind, that kind of corollary play is how I would play it. But would something like that in a 10-year necessarily prohibit me from taking a trade? No, because they're not going to work in lockstep on an intraday basis, guys. Yes, typically they will, largely speaking, they will move together, but it all is dependent on your time frame. If you're someone who's looking for a much more longer term trade, then yeah, you want to be paying definitely a much closer attention to the broader yield or the broader trend of the yields. But intraday basis, man, Mark, the 10-year could go north of 240 today, pull right back, and then dollar could still hold 94.10. So I want to take every trade, as I always say, guys, on its own merits. These correlations in yields are definitely helpful, but they're only helpful to the degree of trying to ascertain what the broader medium-term trend is. Okay, on a day-to-day basis, in and out, we got to be much more flexible, not lock ourselves with a rigid bias. Mark says, I'm with you. All right. Does that make sense, Mark? And then a really good point. Very good point. I'm glad I brought that chart up. But for me, again, kind of still focus on each trend on its own merits. That's all I got for you today. If you have any other questions or trade setups you'd like to review, as always, feel free to throw them on the message board. If not, we will see you tomorrow morning, same time, same place, for another intraday strategy webinar. Keep in mind, again, later tonight, we do have those Aussie CPI laters late in Asia trade, and then tomorrow morning, obviously, the Bank of Canada interest rate decision. We didn't really talk about the loonie today, did we? Here is just a quick look at what that is. I'll give you an update on this again tonight, but another one of those trades where, we were looking for a hold of resistance. We didn't get it. It broke, but it didn't give us much fuel to the upside before catching the 100-day moving average and pulling back. But look, objectively, I can't be bearish while we're above 26. That's the objective weekly, objective monthly opening range high. And then again, the broader slope series that we've been following off the yearly highs, which have been so critical in all of these pivots, that's there too. So even if we pull back, we could find strong support here before launching higher. I don't know. I was more of the mindset of trying to fade strength into this move. I was wrong on that. We broke right through. So what am I going to do from here? Not going to chase it. If we do see a concerted daily close sub 125.97, 126, then we can start talking about possibly trying to play a pullback scenario. But until that pans out, be cautious and respect the upside. Okay, so I will give you an update on this tonight for sure in tonight's update, so you guys have it ready for BOC tomorrow. But just be mindful of where we're trading as far as the stretch to the upside in dollar CAD. All right, guys, best of luck trading, and I will see you all tomorrow morning. Cheers.